Good morning, everybody. It is Saturday morning, June the 6th, 10 a.m. We're here for our flagship weekly webinar. If you've never been here before, welcome. My name's Andy, and I'm in charge of the ROS Media platform. And as always, we have friend Iain Clifford with us today, who's going to be delivering the content. Iain is our founder and president here at the Republic of Old Souls. And today we're going to be talking about Signature Credit Tax Redirection from banks' 945 tax modules. And what we're really going to be honing in on is the inconvenient truth about the 945 module that the banks don't want you to know. If you've been watching any of our content of recent, we've been doing some Q&As, we've been going through some of Iain's documentation as well from Ecclesia Law, and really breaking this whole structure down for you. Today, we're going to focus on the 945 module. Hope you find it of interest. If you're finding it a little bit overwhelming, that's totally normal because there's a lot of information to discuss, but Iain breaks it down really, really well. Just before we get started, guys, a little bit of housekeeping, okay? You'll notice on the left-hand side, there is a sidebar where there's a general chat, so you can put your general chat in there, and we've got people that have been coming in there saying hi from Yorkshire, hi from Australia, hi from the Gulf Coast in Florida, from multiple places in the UK and Scotland, so thank you for your comments there. I've noticed there's a couple of questions in there from members about struggling with their platform. I will take a note of that and I'll pass that on to the team. If you've got specific questions about the actual webinar content itself, could you put that in the Q&A tab? Okay, so at the top, you'll see chat, Q&A, and polls. Put it in the Q&A tab. We collate all of those questions together, and then every week, Iain and I go through all of those questions that you've either put at registration or in the chat here today. Cover them all one by one. We're also going to be doing polls as usual. We do have some handouts. The handouts will come to you guys on an email roughly within 5 minutes of the webinar finishing. If you're not able to watch the full webinar, do not worry. I've also noticed in the chat people asking, will there be a replay? Will there be a recording? Absolutely, there will be. We run replays, but we also in your members' platform so you can watch it there if you need. So that's all I've got to say. One other thing, when it comes to the chat, guys, keep it positive, okay? We don't have any room for negativity here. If I see continual negativity in the chat room, as Liam Neeson once said, I will find you and I will kill you. So I'm going to come along and I will delete you from the webinar if that is the case. All right, we want to keep it positive today. Iain, over to you.
Well, good day, everybody. As I've been saying the last few webinars, in case you don't know my backstory, I used to be fairly heavyweight in the financial services area in the United Kingdom. I became a whistleblower in 2008, 2009 against a bank called Bank of Scotland that had by that stage become the Halifax Bank of Scotland. And the reason why we're here today is because of the consequences of me blowing the whistle on an insolvent bank, which was the Bank of Scotland, which was 40 billion pounds insolvent, should have gone bust, was all covered up by the British establishment, and that then led to the takeover of Lloyds Bank by public ownership, and also the takeover of the Royal Bank of Scotland. So a lot of banking fraud going on, and it was all in my whistleblowing reports. I won't go into all the detail. But basically, as a result of me being a whistleblower, I've been the target of a lot of propaganda for 16 years. Many of my ventures have been destroyed. There's a lot of proxy media agents out there employed by the British establishment to undermine my reputation. Some people don't know what to believe on the internet. It can be difficult. There's a lot of misinformation on the internet, as I'm sure everybody on this webinar is aware of. If you want the truth, there is a website. It's called Iain Clifford Whistleblower.is. It's got the 16 years of history on there. Right now, I'm in constructive exile in a place called North Cyprus, which is out of reach of the British establishment. I have a case in the UK Court of Appeal. It's been there for 6 months because the British establishment tried to jail me in 2025. They were unable to do it. They don't have a case. It's all on my whistleblowing website, and they're so afraid of my case that it's been with the Court of Appeal for 6 months, and they basically are running it into the long grass. Don't want to face it because they know that I'm right. And right now I'm in dialogue with the British Attorney General over my case. If that doesn't go in my direction, then I'll go to the European Court for Human Rights. And if that doesn't go in my direction, I'll be suing some very senior people from the British establishment in Wyoming in personal lawsuits for conspiracy. So quite a few things going on in the background. One of the reasons why they persecute me and put all this propaganda out is because I have a history of being a disruptor. I show people how to basically how the system works. I've been doing it for a long time. They don't want the overwhelming majority to know the truth about how things actually works. Certainly in the financial area, which is where I've been operating all my career. I'm 60. I've been doing these things since I was 19. So I've had a pretty long career and have operated at all different levels of financial services, not only in the UK, but also in the USA, in Ireland, in places like Cayman Islands, in Bermuda, and various other places around the world. So I've got a pretty deep history. I've got a lot of experience. I've run some pretty large ventures. But what we're going to talk about today is possibly, arguably, the biggest piece of financial engineering that I've ever designed. It is a game changer. It's life-changing for those who are doing it. If you're not already doing it, then you hopefully will use this webinar and all the other content that we've put together so that you can make an informed decision. I'm going to be telling you about a tax module that the banks really don't want you to know about, and it's the smoking gun. If you've got a mortgage, it can be very helpful because you can use this information to actually void the mortgage. If you haven't got a mortgage and you're interested in redirecting taxes that belong to you, millions and millions of dollars of unclaimed taxes, which I'm going to be outlining to you on this webinar, that everyone who's over the age of 18 has been entitled to a tax redirection, but they just don't know about it. And even if they do know about it, they probably don't know how to do it. And that's a big part of this webinar. If you've been on my some of my prior webinars, you'll know that Andy and I do a Q&A, generally on a Tuesday or a Wednesday following the webinar. We take all of your questions, we categorize them, we go through them. That's on the ROS Media platform. I like writing research reports to justify everything that I do and everything I'm saying. You can find those at Ecclesia Law Institute. I've recently written a treatise, which is all about the tax redirection of what I call signature credit tax redirection, which is well worth a read if you're interested in the technical side of this and the how the whole of the monetary system really works, not the one that they want you to believe, but the actual true nature of it. I've just been listening to Professor Richard Werner on an interview with Tucker Carlson. He was an inspiration for me about 10, 12 years ago when I read his papers on ex nihilo credit creation. That is a large part of the reason why I started to work on tax redirection. Richard Werner doesn't actually write about the subject that I write about, which is interesting. I'm hoping to have an interview with him soon, because I'm not sure he actually knows about what my financial engineering has uncovered. But we're going to go through some of it today. We're not going to go through it all because it's fairly heavyweight and technical, but hopefully we're going to go through enough for you to get a comprehension on how this system works and how you can make it work for you, not just once, but every single year going forward. It really could be a massive game changer for you. So that's the intro. Let's have a look at the subjects that we're going to cover. We can flip over. A little bit of foundational knowledge. I like to lay the scene because many people who are new to this content don't know some of the big historical events that have that were engineered to bring in what I describe as a modern slavery system. We're going to spend a bit of time on this Payers 945 tax module, which is a really very inconvenient piece of research that I've done for the banks, which is right now being used in the Southern District of New York to help people void their mortgages, which is, I'll come back to that later. We're going to look at the IRS's system of what they do to validate tax redirection and how we navigate through their algorithmic gates, because they've got many of them. We're going to look at the fact that we have proven that this works. We had many proven results in 2024 with actual distributions of tax redirection in 2024. That continued into 2025, but there was a big sabotage of occurrence in September of 2025. It's been very well documented. I'm not going to go into it in a lot of detail, but we did have $600 million of verified tax redirection verified by the IRS. We'll touch on that. And then we'll take I think there's already been some technical questions asked, and we'll go through those. And then please do, load up your questions, and Andy and I will go through them probably Tuesday or Wednesday next week, and you can see those, or you can watch that on the ROS Media platform. So that's what we're going to do. We're also going to do some polls. So if you're interested in knowing more, in evaluating how much signature credit could you redirect, that's the tax, how much tax could you redirect, you can book in a consultation and go through that with our team. And also, there's lots of handouts. So if you're interested in reading, and you can plug these documents into some audio. I've been using some audio where you can just copy and paste the documents into an audio reader, and it will read them out to you, which is quite helpful if you don't like reading a lot of material. So let's move it on. There's a lot of confusion and a lot of misinformation going on out there in what I suppose many people would call the truth and freedom community. There's many ideologies that are being pushed around, have been for many years now, about the subject of what a lot of people call the straw man. The straw man, or others call it the ens legis. It is actually in the law dictionaries a construct known as a person. So person's not a living soul, by the way. Or also in the law books, a citizen, which is a very universally used term. I'm sure that many of you on this webinar will already know that you are a living soul, and you are not the person, you are not the straw man, you are not the ens legis. What's happened is your mum and dad, unbeknown to them, they created an artificial construct through registering the placenta. So just after you were born, just after where I was born and everybody else was born, the hospital takes the placenta and they actually register it as a decedent estate. And because the baby is and was connected through DNA to the placenta, there is a direct linkage between the living soul that becomes an adult, obviously much later, and this decedent estate, which is an artificial construct that is then becomes the person, the citizen, the ens legis. And this artificial construct is very, very important because it's the player piece that operates on what I call the monopoly game of commerce. So if you picture the scene, you've got the living soul, the man or the woman, who's not actually playing the game of commerce as the player piece, but as the player. So you've got the player that's not on the artificial monopoly board, and you've got the artificial monopoly board and all the player pieces, which are the straw men, the citizen or the person, and you've got the governments, you've got the countries. All of them are artificial constructs, and they're all operating in an artificial game of commerce, which no coincidence that the game of Monopoly was introduced over 100 years ago, and many people have played it, many people are still playing it, and that's exactly what is going on in reality. You have the living soul who's not on the Monopoly board but is a player, and you have the player piece, which is the citizen or the straw man or the ens legis, that is the player piece within this artificial construct game. I call it the Monopoly board of commerce, and it's where all of the transactions are going on. It's where a lot of the titles are registered, along with the registration of the actual decedent estate itself. Now, what's actually happened here, and one of the biggest deceptions, is that the living soul automatically becomes the agent for the birth certificate construct. There's a DNA linkage. There's a registration of the decedent estate by your mum and your dad. But when you get to the age of majority, which is for most countries 18 or 21, then you start to operate as the player, but you start to hold yourself out as if you were the player piece, this straw man entity, this birth certificate construct, ens legis, person, citizen entity. And because you do that, you actually are operating an identification fraud, because you're holding yourself out as if you were the birth certificate construct, when of course you're not. You're the living soul. You're actually the agent for it. Now, this agency is a blessing and a curse all wrapped up in the same package. It's a blessing because without it, you wouldn't be able to redirect taxes, which I'm sure that's why you're here on this webinar. But the curse is that the living soul is the underwriter, the surety for everything that the birth certificate construct does on this or within this artificial game of commerce, what I call the Monopoly board. So if you picture the scene, there are two realms. There's the realm of the real, and then there's the realm of the artificial. The real is playing on the artificial construct or the artificial Monopoly board. The real is providing the agency, it underwrites the liability, but crucially, and of crucial importance to this webinar, the living souls transfer their energy onto this artificial construct, Monopoly game of commerce. They do that through the birth certificate construct, because the birth certificate construct is a banker. I've just written a research paper about the Bills of Exchange Act 1882, and Andy and I did an interview on this last week. where under the Bills of Exchange Act, it confirms that a person is a banker. And that is also critically important if you want to redirect taxes, because you have to put the energy onto the monopoly board through a banking entity. And that banking entity is the birth certificate construct, which by definition of it being a person is actually a banker. So the living soul never steps on the monopoly board of commerce. It operates as a surety or underwriter, the liable party. It provides human energy that gets transferred onto the monopoly board of commerce. And that is critically important as kind of step one in this journey into how does the monetary system really work? How does the system of of ownership or lack of it, which we'll come back to later, work? How do taxes really work? What's really going on this artificial monopoly board? So that's kind of foundation step number one. And there's a lot of misunderstanding. A lot of people believe that you can sever the tie between the living soul and the birth certificate construct. Some people think you can cash in the birth certificate because it's some kind of, it has a vault attached to it that you can cash in. A lot of these things are completely false. I've written quite a few research papers at on my blog on the Ecclesial Law Institute about the ideologies and why a lot of them are false. But we don't need to go into that today. Let's move on to the next slide, please. So I mentioned the Monopoly Board of Commerce, and now we're going to get into exactly how does it operate. It's a trust. It's a worldwide trust, and it's a trust that has creditors and debtors. So if you imagine that every single country that makes up this world is operating, the country itself is an artificial construct, just like the person is an artificial construct. Everything within this worldwide trust is artificial. And it was deliberately made bankrupt in 1933. Something called House Joint Resolution 192 was passed in June the 5th of 1933. The bankers, the bloodline banking families, wanted to have more control. So they, as often happens, and I've just been listening to Professor Richard Werner talking about something very similar, about how the First World War, how the Americans were brought into the First World War. What happens is they create these events to get a reaction so that they can bring in their solution. And that's what happened with the bankruptcy of the United States. The United States have become the world reserve currency, taking over from the British pound after the First World War. The British economy was bankrupt, literally bankrupt. The American economy was booming. The American dollar, the US dollar, became the world reserve currency. And the top bankers and the top banking families, the bloodline families, wanted more control. So in 1913, they introduced the Federal Reserve Act. That was introduced when nobody was really looking, and they already got rid of the opposition by sinking the Titanic, where there were a lot of opponents to the Federal Reserve Act on the Titanic. They then managed to boom the economy in the 1920s. So you had a lot of prosperity in the 1920s. And then you had a deliberate crash, one of the biggest crashes in world history, the Great Depression. You had the crash, the Wall Street crash, the Great Depression of the early 1930s, which enabled the bloodline banking families to bail out the United States as a corporate government. And what that brought in was a permanent reorganization of the United States. And because the United States was then and still is today the world reserve currency, then gradually from 1933 up to 1973, with a few steps and events along the way, things like the Bretton Woods Accord of 1944 and Nixon taking gold away altogether in 1973, and the majority of the gold was confiscated in 1933. And so you have this artificial construct, this trust, where the United States was pushed into permanent bankruptcy in June 5th, 1933, and all of the gold was confiscated and used as collateral for the bankruptcy, along with all of the infrastructure, along with all the land, along with all the property, and most crucially, along with the birth certificates themselves. Because those birth certificates, those artificial constructs which were registered, basically linked to the energy of the people. So the bloodline banking families as creditors basically used all of the collateral of gold, of land, of property, of all prosperity, and crucially important, the energy of the people, by taking the birth certificates that became negotiable instruments and actually became valuable securities for the cabal, for the banking cabal, to take as collateral for the bailout of the United States. That system is still running today. So you've got the original creditors of the bankruptcy, which is the bloodline families, the banking families, and then you've got the people who are creditors to the bankruptcy, and they don't ever step onto the Monopoly Board of Commerce, but what they do is transfer energy onto this Monopoly Board, this worldwide bankrupt trust. Now, of crucial importance is that the energy that gets transferred onto the worldwide Monopoly Board of Commerce, or the trust, that energy generates a tax payment that the top banks pay to the United States Treasury, that was appointed the bankruptcy trustee for the entire World Monopoly Board, this worldwide trust. So there is a tax revenue being generated for the use of human energy. And you may have already guessed it, the 945 tax modules is what the banks use to pay tax for the use of human energy. They don't want you to know it. I've published research papers on it, and we'll be talking a little bit more about it later, because it is absolute proof that the banks don't lend money. The banks use your energy, my energy, human energy, to create currency, and they use it as debtors. And as a debtor, they have to pay tax for the use of it. And they pay tax for the use of human energy on the 945 tax module. Let's move it on. So we have this bankruptcy of the entire world. It gradually spread so that every nation became bankrupt, operating a debt-based system. If you've ever wondered about world debt, if you go on to the world debt clock on the internet and just look at it, you'll see it spirals up and up and up, never comes down. That world debt, if you add it all together, many hundreds of trillions of dollars, that is basically a measure of how much human energy has been used already, because that human energy effectively is debt. And the amount of tax revenue that is generated every year that the banks are paying into the bankruptcy trustee, being the United States Treasury, and given the fact that the United States Treasury was appointed the bankruptcy trustee, they collect the taxes that the debtors are paying to them for the use of the energy. And the biggest debtors on the Monopoly Board of Commerce are in fact the banks. Interestingly, they're not the richest organizations. They're the biggest debtors on the Monopoly Board. And what happened in 1933 is that the money of substance that used to be backed by gold was withdrawn, replaced with what's called money of account, which basically is ledgers. It's like accounting ledgers. There's no actual money of substance at all. All there is ledgers. And every time a transaction is set up on this artificial monopoly board, this artificial trust, there is actually a new debt created, which adds to the world debt. So when you make a bank payment, when you sign up for a loan, a credit card, or a mortgage, what's actually happening is your energy is being transferred from the living soul, you the living soul, through the artificial construct, the player piece that sits on this monopoly board of commerce, this worldwide bankrupt trust. And your signature actually creates what's called a negotiable instrument, or a bill of exchange. If you refer back to the Bill of Exchange Act of 1882, it talks all about what they are. That is brand new debt that is being created and added to the world debt. And it goes on to the monopoly board, and the bankers actually use your energy, everybody else's energy, as nominees, which is a very important point as well. A nominee is like a fiduciary. It's like you've nominated the bank, you've transferred your energy, you've deposited your energy onto this bankrupt trust, this world monopoly board, and you've given it, basically, you've handed it over to the bankers to operate as a nominee for you, the living soul. They use your energy all the time, and they do very, very well from it. But because they're not the actual creditors, because they are debtors, they pay taxes for the use of human energy. And they pay the taxes, as I mentioned just now, on their 945 tax modules. Next slide. So 1933 is a very, very pivotal year. House Joint Resolution 192. We go from money of substance to money of account. We go from gold-backed currency to human energy-backed currency. We go from a system where you can actually pay for goods and services to a system where you can only discharge. You can only issue new promises to pay. You can't actually pay anything in the current monetary system. You can only discharge. And every time you discharge, you're increasing world debt. You do this by signature credit. You're actually depositing your energy onto this artificial monopoly board through your signature, which is why I call it Signature Credit Tax Redirection. And it all starts with the bankruptcy of the United States in June the 5th, 1933. You can go and have a look at it. It's still very much in force today. It's a permanent reorganization. It wasn't a temporary measure. It's permanent. It will never be repealed because the whole world system works on this monetary program of what's called ex nihilo credit creation, which we'll come back to in a minute. Next slide. And here we are, ex nihilo. What does it actually mean? Well, let's talk about a mortgage, because it's a very, very good example of how currency springs into existence. If you've ever had a mortgage, or if you're thinking of getting one, or you have one and you may have discharged it in the past, how did it come about? Well, I'll give you the very, very quick walkthrough of how that mortgage came about. You went to a bank, either in person or online. You went through a whole due diligence process. They told you you qualified. They said you've got to fill in this form. You've got to sign the form. So you do. You sign for the mortgage. That signature actually creates a deposit of your energy. Your energy is being transferred through the birth certificate construct, the person, which, by the way, is going to take the mortgage on, and deposits human energy. The bank takes the human energy in. They take it in as their asset, And then on the other side of their balance sheet, because everything has two sides, it's double entry bookkeeping. That's the asset, which is your deposit. That's the liability. They take the asset, they create a matching liability equal to the amount of your promise. The asset goes away. This debt is then what you see in your mortgage account. They say you'll find the mortgage in your account. Well, that never existed before. That is now a negotiable instrument. It's a security. And what the banks do with it is they sell it to the investment banks. And if you've ever watched the movie, I think there's The Big Short, there's also The Great Taking, which is another really good documentary to watch. But The Big Short tells you all about how mortgages are traded on Wall Street. So the Wall Street banks, they take these debt securities into tranches, they disguise them, they put them into bundles, into tranches. They use a organization called the Depository Trust Company and a subsidiary of it called Seed and Company to disguise all these tranches, and they basically trade them for profit. They hypothecate them. I'm going to do a webinar soon on hypothecation, and I've just written a research paper on it as well, which you can find on ecclesial law, because it's what the banks are doing with these debt securities. By the way, these debt securities are also bank payments. They're also mortgage, credit cards and loans, as well as mortgages. So it's not just mortgages, but mortgages is a very big part of this. And it's those debt securities which are bundled up in tranches that the banks are paying taxes on their 945 tax modules. So the credit, the banks don't have any money to lend you. See, they take your deposit, they match it with a liability on the other side of their balance sheet. That liability is a debt. That is ex nihilo credit creation. Professor Richard Werner was the guy who opened my eyes to how that works in his research papers that he wrote about 10 years ago or more. One of his best papers is, Can Banks Really Create Money Out of Nothing? Well, it's not actually out of nothing. It's out of the signature deposit that they create this ex nihilo credit. The governments do it. The governments don't use taxes to pay for things. They create ex nihilo credit creation as well. You have the Treasury, you have the bank, the central bank, and the Treasury basically issues a promise to pay, like makes a deposit, and the central bank issues a debt, and that's how most of the world's economy is financed at the government level through ex nihilo credit creation. So it's not just going on with mortgages, the whole system worldwide, every country pretty much uses the same ex nihilo credit creation. And to put it into context, 97% of all of the debt, the world debt, is created through deposits of human energy at the banks. So the banks are responsible for 97% of the world debt through this ex nihilo credit creation, and the governments are responsible for about 3% of world debt through their ex nihilo credit creation. Next slide. And nothing can happen in debt creation or ex nihilo credit creation without the signature. The signature is the contract. Basically, it creates the contract. You don't actually have to sign a bit of paper. You can just type in digits now in your computer terminal or using your phone. You can swipe your phone. Anything where there's an intention to issue a negotiable instrument is classified as signature. It's an intention to create a deposit of signature credit energy. It doesn't have to be a written signature, but it's known in the system as the signature event. And it is what is creating all of this world debt through the signature. Next slide. So when you create a deposit of human energy, the human energy goes on to the monopoly board itself at a zero value. So if you imagine a mortgage, you've signed for a mortgage. The mortgage may be $1 million face value. When you sign the mortgage application, that $1 million springs into existence plus interest, because you have to pay the alleged borrower has to pay interest on the $1 million debt. So what's going on is when you transfer your energy, you are depositing your energy. That energy is at the beginning, at the outset, valued at zero. Its future value, after the creation of the debt, the security, has a very high value. And this is where we start to get into something called original issue discount. Because when you deposit human energy, it goes on to the monopoly board, this artificial world bankrupt trust at zero value, but it has a very high future value because the commitment of interest is locked into that security. The security that the banks are going to trade and sell, or sell then trade to the investment banks, that has all of that interest rate commitment attached to it. So the future value of these securities is very high. And that I'll talk more about that when we talk about hypothecation by the banks. So you have this high future value and you have a zero value at creation. The difference between the high future value and the current value is what the banks pay taxes on. They pay taxes each year for the future, for the use of these debt securities. The valuation of them is what's known as the original issue discount valuation. So that is what's going on. And there literally are trillions of original issue discount valued securities in the world. It's mostly the investment banks in Wall Street, New York, that are trading these securities. There are trillions of them secured and recorded at the depository trust company, disguised into new. They give them new names. These tranches, they don't call them the name of the banks that are trading them. They give them a different name, and that name is disguised and held at Seed and Company. Quite deceptive. Been going on for at least 100 years, and it's not stopping anytime soon. Next slide. So when I started looking into this, when I realized that the original bloodline banks were creditors to the entire system, when I realized that the entire system is operating in this permanent bankruptcy, when I realized that the banks are paying taxes for the use of human energy, but that tax that they're paying actually belongs to the original creditors, the living soul or souls that transferred that energy onto the monopoly board. What I did was I set about with my skill of financial engineering in how could that signature credit tax be redirected to the rightful owner, to the rightful creator of the signature credit energy. And that's really what the Clifford Protocol is all about. It is a step-by-step financial engineered process that redirects the taxes from the investment banks who pay the taxes to the United States Treasury as the bankruptcy trustee to a foreign grantors trust, which is specifically set up, that sits on the monopoly board as a nominee for the true creditor. So if you want to do this, we will form an international grantor trust. It sits on the monopoly board as a player piece. It qualifies as a creditor entity. When it files the trust, when the trust files through a professional tax preparer. You have to have a license to file taxes in the United States system. So we have a licensed practitioner that can file something called 1099 OID against the investment banks, which we've already identified are using your human energy. So the Clifford Protocol tracks and traces your signature from the past that created bank payments, that created mortgages, loans, and credit cards. We track it all to where is it now? Where is that signature credit now? Which banks are using it? Which banks are paying taxes on it? We create a foreign grantors trust. That foreign grantors trust files 1099 OID electronically through a tax preparer with a license to do so. As soon as the 1099 OID is filed, the IRS system, which is the United States Treasury system, changes the grantor trust and it becomes something called the holder in due course of the signature created credit. The holder in due course is now entitled to the taxes which the investment banks are paying year by year for the use of the human energy. So it is the foreign grantors trust that becomes a nominee creditor entity entitled to the taxes which the investment banks have already paid. So we're not asking the banks to pay more tax. They've already paid taxes. And what we're doing is we're setting up a creditor entity that we will receive the taxes as redirections of taxes that have already been paid on the bank's 945 tax module. So the Clifford Protocol finds the tax, it finds the signature credit, it creates a foreign grantors trust, it files the appropriate tax returns, it then creates a pathway through banking rails for the IRS to redirect the taxes which it's already collected for the benefit of the grantor trust to the grantor trust, because the foreign grantor trust has become what's known as the holder in due course. That is the short version of the Clifford Protocol. There is a document that you can find at Ecclesia Law where I step it all out, all of the steps of it. Andy and I have done an interview on it. We've done many interviews. I've also written a treatise, as I mentioned earlier, which is the whole thing from A through Z in a treatise, and Andy and I have done an interview on that as well, where I go into it in a lot more detail if you're interested in the detail. But basically it's financial engineering, and it's a lawful way of redirecting taxes which belong to the original creditors, which is the living souls. They can't step on the board themselves, but they can put a foreign grantor's trust onto the monopoly board for the tax redirection to happen lawfully. And that's a big part of the Clifford Protocol. We had a webinar when I first started talking about the Clifford Protocol. One of our members put in the comments, should this win the Nobel Prize? Well, I'll let you judge that. If you read the treatise of how the whole A through Z works, I'll let you judge that for yourself. Next slide. It basically is 5 steps. I mean, there's a lot more going on than 5 steps, but there's 5 major steps. Recognition, that's tracking the signature credit. When was it originated, with which banks, and the value of it? Where did it go after that? How, what it ended up in these debt securities. They were then bundled up. They were then transferred. They were then put into these tranches, and then an investment bank's using them, hypothecating them, and then ultimately paying taxes for the use of them. Our system tracks all that, identifies all that. All we need from you is the name of the bank that you had an account with, whether it was a mortgage, a loan, a credit card, or the bank that you use for bank payments, whether it was a business account, whether it was a personal account, it doesn't matter. What were the rough amounts? There is a $2 million a year level that we can operate without going into a manual review. So we try and keep Signature Credit Tax Redirection at $2 million and below. That's every year. So it's not just a one-off event, it's an every year event. And the next step is the calibration, is to value the signature credit. So we know that it goes on to the Monopoly Board of Commerce at zero. What's it worth at the moment? How much tax is being paid on it? Our system calculates that, and that's the tax redirection part. And then the creation of the grantor trust is pivotal, because the foreign grantors trust becomes the holder in due course, which is, you can't make this work without it. It's so vitally important, the foreign grantors trust. And then if we then just flip over. And then we get to the smoking gun, which is the 945 tax modules. Every investment bank is paying taxes to the United States Treasury. They pay taxes every year. They should be paying a lot more tax on their 945 tax modules. They vastly underpay on their 945 tax modules. So what is the tax module all about? The 945 tax module is all about the use of human energy. The banks have to pay taxes under the original issue discount methodology. The IRS knows what the banks are using, because they track and trace the signature credit created energy or these securities as well. So the IRS knows exactly how much the investment bank should be paying, but typically they don't pay enough taxes on the 945 tax module. They pay a lot of taxes on other tax modules, which is an interesting way of them kind of disguising the fact that they're using the human energy. But the giveaway is in the description of what the taxes are for. And it says very clearly in the tax manuals that the original issue discount is one big component of the taxes that the investment banks are paying. Because what they've done is they've securitized the human energy. It's got a high future value. They've got to pay tax each year for the use of it. That's called securitization, is what they're doing. And it's interest. It's actually federal interest, because the use of that human energy generates interest, federal interest. And that is what the 1099 OID is all about. And if you look at the IRS publication 1212, it basically says in there that if the nominee that's using the signature credit is using it as a nominee, they've got to pay tax for the use of it. But if the true creditor turns up and files 1099 OID, which is the foreign grantors trust filing 1099 OID, then the investment bank that is operating as a nominee can no longer claim that they are the creditor. They automatically fall into the debtor category, which is what they were anyway, but they were actually operating as nominees. And if you're looking for the way of avoiding a mortgage, that's how to do it, is to identify the bank that you've got your mortgage with, the tax payments that they're paying on their 945 tax module. It won't be the bank you've got the mortgage with, it will be an investment bank that's bought the mortgage note or mortgage security. And if you evidence that the bank at the top of the food chain is paying taxes on your mortgage, that makes them a debtor and not a creditor. And if you file 1099 OID through the foreign grantors trust that I've been talking about, that changes the whole game. It makes the investment bank the debtor, it makes your foreign grantors trust the creditor, and that filing of the 1099 OID actually voids the mortgage. We've got some cases going through the Southern District of New York right now, which I'll hopefully be talking about in the very, very near future. Next slide. So how does the 945 tax module work? Well, basically, it's all of this human energy. If you take all the investment banks, they're paying billions and billions of taxes, between 50 and 100 billion a year. That should really all be on the 945 tax modules, but they don't. They disguise it. They pay taxes on the other tax modules. They pay some tax on the 945 tax module. It's basically a withholding. It's income that they're, or tax on income that they are withholding, and the income is the discounted value of the human energy. It's being discounted via the 1099 OID discounting calculation. There isn't actually any income generated, but the equivalent under the 1099 OID system generates what they call federal income. There isn't actually any income, but it's a mechanism for calculating how much tax the investment banks are paying. And as you can see from the slide, the depository trust companies where all the securities are registered, there's a subsidiary of it called Seed & Company, where they give these bundles, these tranches of securities. I call them street names. They're just like made up names. But the banks and the giveaway is that they pay taxes using their EIN number. That's their employee identification number. There's a CUSIP number, CUSIP, which is the securities tranche reference number. So you can actually see, and our system finds this, because we use an AI system to value how much tax each investment bank's paying on their 945 tax module, under which CUSIP number, and then we can track your mortgage, bank payments, loans, credit cards to a CUSIP number, and we can identify that they're actually paying taxes on your human energy through our AI system. And then we've already created the Grantors Trust, Foreign Grantors Trust, file 1099 OID, makes the Foreign Grantor Trust the holder in due course, and those taxes then are redirected to the Foreign Grantors Trust for your use. You spend them and recoup them. Next slide. So why do they pay taxes? Well, the banks pay taxes basically because they are debtors. They are holding themselves out as nominees, but in fact they are debtors. They have to pay tax for the use of the human energy because it never belonged to them in the first place. That's how the system was built. It's how the bankruptcy, this permanent reorganization, was due to work. The creditors collected taxes, the debtors paid taxes. The banks are operating as nominees, but they're really debtors. They can maintain their hypothecation model, but only if they pay taxes for the use of the human energy. So that's basically what's going on. They pay taxes because they really are the debtors. Any taxpayer is a debtor by definition within this construct, this worldwide trust, which is a bankrupt system in all ways. Everything in the system is a negative. Everything in the system is a debt. So nobody has wealth. People only have debt, and that includes the banks, of course. Next slide. Now, the IRS have a sophisticated system of also identifying where is the signature credit, which bank is using it, how much tax are they paying on it. And basically, without going into a lot of detail, in order to redirect the taxes from the investment bank's 945 tax modules, so remember, they've already paid this tax, and we're now going to redirect it from the United States Treasury to the Foreign Grantor Trust. You have to make sure, we have to make sure that there's enough tax paid on the 945 tax modules that equals the amount of tax that we're trying to redirect. If there isn't, then something really critically important happens. As a trust company that is operating all of these foreign grantor trusts, a command is given to the IRS to move taxes from the other tax modules that the investment banks have already paid taxes on to the 945 tax module, so that there's enough taxes that are equal to or greater in value than the amount of the tax redirection that all of the grantor trusts that we're filing the 1099 OIDs for can then qualify, and then that's followed up with something called a 1041 tax filing, which is basically the tax return that generates the redirection of the taxes from the 945 tax module to the foreign grantor trust. So the 810 algorithm that the IRS employs makes sure that everything lines up, all the credentials line up, there's enough taxes paid, the foreign grantor's trust is a holder in due course, it is entitled to the tax redirection, and there's enough taxes paid on the 945 tax module, so that there's enough taxes already paid to redirect them to all of the grantor trusts that have already filed that 1099 OID. If there isn't enough taxes paid on the 945 tax module, then the IRS's algorithm will freeze the tax redirection. They can't redirect taxes if they haven't received them on the 945 tax module. If there's not enough on the 945 tax module, then there's what's called a cross-modular transfer, a command to move the taxes onto the 945 tax module from the other tax modules. And that is also a bit of a massive clue that the 945 tax module is the dominant tax module. If you couldn't move taxes onto it from the other tax modules, then it would be subservient to the other tax modules, but it isn't. It is the dominant tax module, and that's all wrapped up in Revenue Procedure 2002-2026. Next slide. So here's a bit of a diagram, if you like to look at it in a visual way. You've got the original signature on the left-hand side. You've got if you try and redirect taxes and you don't have the foreign grantors trust set up, that's the red arrow down the bottom, you're going to end up with an IRS algorithm 810 freeze and never going to get the taxes redirected. And that is because basically the tax filing is not being done by a nominee creditor entity, it's being done by a debtor entity, and that is going to generate an algorithmic freeze all the way through on the bottom of the diagram. It's going to basically freeze the tax redirection. The top line, the green and blue, that is the way to do it. 98 series grantor trust, moving taxes onto the 945 tax module. It clears through the algorithm, the 810 IRS 810 algorithm, and gets into what's called Trias 310, which is the banking rails that the IRS use to redirect the taxes through what's called Trias 310 to the bank account that's been set up for the foreign grantor trusts. Next slide. And if you are wondering about the Revenue Procedure 2002, basically it is because the foreign grantor trusts have this status of the holder in due course, the trustee that's operating and the officer for the grantor trust can command the IRS to move taxes onto the 945 tax module, because ultimately everything is signature credit. Everything, all the taxes should all be paid on the 945 tax module, but the banks don't want to pay large amounts on the 945 tax modules because it may give away that they are debtors, not creditors. So they underfund them, but the holder in due course standing of the foreign grantor trust can compel and command the IRS to move the taxes onto that module, which is the bank's, it's the bank's smoking gun. The 945 tax module tells you that the banks are debtors, not creditors. They wouldn't be paying taxes for the use of the human energy under the 1099 OID system if they were creditors. They're just not. And this evidence that you can produce in a federal courtroom, if you ever needed to, if you were trying to avoid the mortgage, for example, proves that the banks have never been the creditors. They've always been the nominees, and actually they've always been the debtors. Next slide. So in order to redirect the taxes and do it safely, and so that you've got the ability to use the tax redirection, spend it and recoup it year in, year out, which is this kind of infinite loop of spending and recouping, because once you've redirected it once to your foreign grantors trust, it can then be spent, which is creating new signature credit. Then the taxes can be redirected the following year. You spend it and recoup it, spend it and recoup it. But in order to make it work, you will need to invoke 3 protocols. That is the envoy protocol, which, if you go all the way back to the very first slide, remember the agency, the living soul is the agent for the birth certificate construct. You actually want to be operating from the office of the General Executor. It's helpful if you're an envoy of the Republic of Old Souls. That gives you the credentials to set up the Foreign Grantors Trust, which is ultimately going to be filing the 1099 OID and becoming the holder in due course. It also helps you in other areas, but I won't go into all that here. We've done interviews on the envoy protocol. You can find them at the on the ROS Media channel. The Asset Fortress Protocol is a separate Foreign Grantors Trust, which will become your private treasury. This has a bank account. It's the trust bank account. You're going to use the Asset Fortress Protocol for 2 reasons. One is to spend and recoup, spend and receive those tax redirections or those recoupments. That's your private treasury. It's on the Monopoly Board of Commerce, but separate from the person. It doesn't get involved in the track and the trace and all of this, digital ID that will be coming in the near future. It's already in many countries. So you can avoid that digital ID by having the Asset Fortress Protocol and its private treasury bank account. And also it can hold the assets. So once you've got no debt and you're accumulating real assets, you can hold them in your private treasury or your private Asset Fortress Protocol trust. It is a nation in its own right. It doesn't report, it doesn't pay taxes. It qualifies for a private bank account, which is the private treasury. It's what all the elite super rich do, is they have these Asset Fortress style trusts, and that's what you need as well. And obviously, to make the Clifford protocol of signature credit tax redirection work, you will need the currency creation protocol, which invokes the Clifford protocol. So those 3 come as a bundle. You can enroll by making a donation to the Republic of Old Souls. If you want to do this, we'll be running a poll shortly. You can book a meeting with one of our consultants. They'll go through how much signature credit up to that $2 million limit per year that you can start to redirect the taxes. And they'll help you to get started with that. They'll help you to value the signature credit, the value of your signature credit, and they'll help you to get the ball rolling on the process. And that will include all of the protocols wrapped up in a bundle. Next slide. So the Asset Fortress, the Envoy protocol, and the currency creation, 3 protocols, all wrapped up in a bundle. We have a donation sliding scale from standard down to a very low level for those who are struggling with budget. We have a back-end contribution or donation, which you get back, by the way. It's like a sliding scale. We try and make it possible for everyone who wants to do this to be able to finance it. And if you're really up against it, we have our webinar reward scheme and our avatar reward scheme, which you can use to generate referrals. People that come to our webinars, people that use the avatar, which we had to take off the market last week. We are reintroducing it in the very near future. It was taken off the market because it was censored by the avatar platform provider. So that tells you a lot about the fact they don't want you to know this. So we're re-engineering the avatar, relaunching it under a new, a private platform, if you like, that won't be censoring the content going forward. So the 3 pillars, you can access those through making a donation. And if you're really struggling with budget, then you can make referrals. You get $100 for each referral that comes to a webinar, uses the avatar, and you can use that to set off against the donation required to get the bundle, the Monopoly Game Changer bundle. If you want to know more about the Monopoly Game Changer, there is an interview on the ROS Media channel. You can, Andy's asking me questions about how it all works, so you can come and play that video as well if you like. Next slide. And for those who want to know, does it work? Well, we had actual tax redirections banked in 2024. We had our ex-head of tax had her tax redirections banked in 2025. We had 600 million of tax redirection confirmed in 2025. And he's done an interview with one of our team called Ange, where they're showing the tax transcripts. That's the confirmations from the IRS, not all of the 600 million, but quite a high value of them, which you can watch that video. That's on the ROS Media channel as well.
Just back the chat in, so that link is in the chat if you want to look at that, guys.
Yeah, great. So if you want to see that and see the proof that this works, you can see that. This is not a loophole. This isn't something which they're going to shut down because I've figured out a loophole. This is exactly how the system works. If you read my treatise, I go into it in a lot more detail and justify everything. And I'd love to be debated by someone who claims that it's not how the system works. Nobody ever does debate me because I think I figured everything out, and it's all in that treatise. Next slide, please. So I want you to think about how many, estimate, not being morbid, but how many more years are you going to be playing Monopoly? Is it 20 years, 30 years, 40 years, 50 years? Just think about what is the average lifespan these days. Let's say you've got 50 more years to play Monopoly. What we're talking about here is you recouping or redirecting taxes up to $2 million, spending and recouping that every single year going forward. So if you've got 50 years to go playing Monopoly, we're talking about $100 million. That is what the opportunity is about. Once you have got the ball rolling and you've got your asset fortress protocol, you will be able to spend, buy real assets, hold them in your asset fortress protocol, get rid of all your debts, taxes, completely transform your game of Monopoly going forward, and then redirect the taxes on everything you've spent the previous year, year in, year out. So it's not just about $2 million. It could be 100 million. It could be more than that if you've got more than 50 years to play Monopoly going forward. I think, you know, if you were given the winning lottery ticket for free, I think you'd be taking it. Yeah, and that's what this really is. It's like the winning lottery ticket where you can receive 2 million a year per grantor's trust. So if you're married, you can get $4 million a year, $100 million each over the next 50 years if you've both got 50 years to go. Next slide. Some people have said, will it bankrupt the United States Treasury? The answer is absolutely not. The Treasury doesn't need taxes to run the United States economy. They create ex nihilo credit. They don't need the taxes. The taxes are just there because it's part of the modern slavery model. It won't make any difference to the United States Treasury whether they retain the taxes or whether they redirect them to the grantor trust. Next slide. And, you know, you can go all the way back to the age of 18. Now, for many of us, if we go all the way back and try and scoop everything up in one go, that will equal more than $2 million. So my recommendation is that you identify the big things that you've done, like mortgages. What's the mortgages, if you've ever had those? What was the face value of the mortgages? Have you had loans and credit cards? Was there a time when, and maybe you still are, where you spent a lot out of your bank account? Did you have a business with a bank account? Add all these things up and you'll probably quite quickly come to 2 million. What we need is the name of the banks that you used and the values of the signature credit event. So the value of what you spent in a year from a bank account, the value of the mortgage, the face value, the value of the loan, the value of the credit card. There is a calculator that we've got on our platform. So if you have a consultation, you'll be able to work with one of our consultants and evaluate, how do you get to that $2 million value? What banks, what amounts, what events can you add together to add up to that 2 million? And once you've got there, you can enroll. If you're already doing this, but you're not doing 2 million, you can upgrade. You can add more signature credit into your existing recoupment filings if you want to upgrade. And once you've started, then every year you'll be spending and recouping that signature credit, as I mentioned earlier. Next slide.
All right, we are now on to our top 7 questions from registration. So I know you guys have been asking some questions in the chat. I've been frantically trying to keep up with those while Iain's been delivering the content. So thank you for your questions. As I mentioned before, if you've got a question surrounding the material, please put it in the Q&A tab. It just makes it easier for us to keep it all in one place and collate that. So let's go through the 7 questions that we've got here. The first one, Iain, is how did the passage of House Joint Resolution 192 in 1933 establish this usufruct relationship where the living populace is presumed to act as a liable surety for a bankrupt corporate debtor construct?
Well, it starts with the Bills of Exchange Act, which enabled the issuance of promises to pay in the future, negotiable instruments or bills of exchange. Then you get to the Federal Reserve Act, which came in 1913. That paved the way. Then you've got the boom of the 1920s, which was deliberately engineered so that they could crash the economy. And then you've got the creditors bailing out the United States government, which was already by that stage a corporation. And the deal was simple, just like any kind of mortgage. If you take a mortgage out, it's the lender, which was the bloodline banking families, they took out a charge over all of the assets, and the assets included the birth certificate construct, which is where the usufruct system is. So what's happening is the original bloodline banking family creditors allow the United States and all citizens to use the collateral, which is underwriting and acting as the collateral for the bailout, and that is where House Joint Resolution 192 came in. It came in because the bloodline banking families made the system bankrupt and then bailed it out. So its problem reaction solution, just like David Icke says. That's how it all came about.
Okay, so question number 2 is, under the provisions of the Bills of Exchange Act 1882, how exactly does the biological signature of the borrower act as the primary monetization event that allows commercial banks to create this book ex nihilo?
Well, if you look into the Bills of Exchange Act, there's two parties. There's the maker of the instrument, that's the issuer of the instrument, and that is through signature. And then there is the recipient of the instrument. So you've got the payor and the payer, and you basically got to have those two. The Bills of Exchange Act made it possible to issue an instrument to discharge a debt, because it's basically an accounting. It's an accounting methodology. So the Bills of Exchange Act, already in 1882, they were planning to bring this system in, and they had to have a mechanism which also includes UCC3. If you're operating in the United States, you will know the Bills of Exchange Act as UCC3. It's basically promises to pay, and the Bills of Exchange Act ratifies it and enables ex nihilo credit, because if there wasn't a Bill of Exchange Act, ex nihilo credit creation couldn't happen, because there would be no mechanism, no law that governs the promises, which are effectively these deposits of human energy. You have to have an act worldwide, and the Bills of Exchange Act is adopted in nearly every country. They call it different names in different countries, but it's all based on 1882 Bills of Exchange Act. And it is the mechanism to transfer human energy. The signature creates the promise. The promise comes from the maker. The maker is the living soul, and that act basically is the beginning of this ex nihilo credit creation system.
Okay, so question number 3, Iain, is according to the nominee reporting mandates of IRS publication 1212, why does establishing an issue price of 0 dictate that the entire face value of a negotiated instrument is classified as original issue discount? I think a lot of people find this one difficult to come to terms with. The starting price is 0, then there's a future value, and what's the in-betweener? So,
well, the future value is the easiest way to look at this is a mortgage. You say, okay, I'm going to get $1 million mortgage. I sign a bit of paper, and that million springs into existence. So the future value of that security is $1 million. It's actually more than that because of interest. But just take the face value, it's $1 million. It was created out of a signature. The signature is 0, has 0 value. Suddenly, it goes from 0 to 1 million as a minimum level, minimum valuation. Think of a bank payment. You make a bank payment of $100,000. Well, you sign to make a bank payment as 0, and 100,000 is the value of the bank payment. So that's 100,000 future value. It's the value of the debt. It's the face value of the debt. The world debt, $300-400 trillion, went on to the Monopoly Board at 0 value. The face value of the debt is the future value, and that's what's being discounted. That's what the taxes are being paid on, is the discounted value of the debt, the face value of the debt, and that's pretty much how it works. Original issue discount is just a way of valuing how much of that future value, that face value, is being used year in, year out through the journey of the origination to the maturity date of each of the instruments.
Okie dokie. So question 4 is, why does attempting to claim an OID refund using a retail social security number automatically trigger this automated information return document matching the IRDM system to a process status 77 and then a transaction code 810 freeze? Why does that happen?
It's simply because the system you can only redirect taxes to creditors. You can't redirect taxes to debtors. Well, if you file 1099 OID as a debtor, as a person, which has got the social insurance number, there is no entitlement to redirect taxes. The debtor can never be the holder in due course. Only a creditor entity can be a holder in due course. The creditor entity is the foreign grantor's trust. It's separate from the debtor. It's not the debtor. It's not the straw man person. It is a separate entity, and it qualifies as a nominee for the true creditor. The true creditor being the living soul, and in its own right, because it's a nation in its own right, it can operate as the creditor entity that becomes the holder in due course of that signature credit, and the taxes are due to it because it's a creditor entity, not a debtor entity.
Okay, thank you for that. Question 5, Iain. How does the specific utilization of a 98 series foreign grantor trust and the filing of IRS Form 56 establish this fiduciary as an unassailable holder in due course under the UCC code? I think it's 3-302, the UCC code, isn't it?
Yeah, I mean, it comes down to what it says in IRS publication 1212. If a nominee files a 1099 OID that belongs to the true creditor, which is the beneficiary of the foreign grantor's trust, then essentially the foreign grantor's trust becomes the holder in due course, as it describes in UCC 3-302. It's all about holder in due course. If the grantor trust is not the holder in due course, it's not entitled to the tax redirection.
Okay. So, question 6, by what legal authority does a manual fiduciary command invoke Revenue Procedure 2002-26 to forcefully reallocate a nominee's bank Form 1120 corporate surplus into their underfunded Form 945 withholding module? That was a bit of a mouthful, that one, but I guess what they're asking there is, what's the legal authority to be able to command the IRS to move it from the 1120 over to the 945?
Well, the legal authority, again, is holder in due course. The grantor trust, the foreign grantor trust, has established itself as the holder in due course. It can fill in what's called a Form 56, and it can take over and command the IRS as if it were the taxpayer. The taxes belong to it. It's the creditor. It's the holder in due course. It's, as it says in IRS publication 1212, it has the creditor status. It can command the IRS as a creditor. Remember, the IRS is the bankruptcy trustee for the creditor. So you've got a creditor, you've got the grantor trust as a creditor, telling the IRS these taxes that you've already collected belong to this grantor trust. As the holder in due course, it can command the IRS to make that cross-modular transfer under the Revenue Procedure 2002-2026.
Okay, and the final question, Iain, is how does the extraction of the 26-digit information, or the IRMF reference string, serve as ledger verified proof of a perfected nominee correction? And how does keeping individual claims under $2 million bypass the Joint Committee on Taxation reviews?
Well, the 26-digit IRMF reference number is the tracking and tracing of all of that signature credit from the origination all the way through to the tax payment on the 945. The IRS have a system, the IRMF system, to track that. Our AI system also tracks it as well. We can match it up. The 26-digit information master file, each of those 26 digits means something. If you read my research papers, It's in the treatise as well. I map it all out, what that 26 digit means. It's like a postcode or a zip code. You break it down into components of the 26 digits, and it tells you the bank name, where the signature credit was generated, where it was transferred, what's going on, you know, who's using it now. It basically tells you everything you need to know, and it is proof that the grantor trust is the holder in due course, because once the 1099 OID is filed, it generates a 26-digit IRMF reference number, and that is the proof of the conversion of the, not the conversion, but the ratification of the investment bank is no longer a nominee presumed to be creditor. They're now a debtor, and the foreign grantor trust is the nominee holder in due course creditor. And in order to avoid the 2 million limit, I mean, you could go over 2 million, and we would you know, go into an appeal if a signature credit was stopped, and there would be the law backing the tax redirection. But as an organisation, we just don't want thousands of manual reviews. So in our view, if you are able to live on up to $2 million a year, which I don't know very many people that couldn't, it should be sufficient. Every year, 2 million per grantor, 4 million if you're married or have a partner. That should be enough for anybody to operate on the Monopoly Board.
All right, so that's all the questions. Let's now go to the polls, guys. So we've got a couple of polls for you. I'm going to launch them individually. In terms of the first poll, let me just get that up here and we'll get that started, which is, do you want a consultation to discover how to proceed with the Monopoly Game Changer protocol? So let me get that launched. If you can vote on that one, that would be great. Yes, I'd like to get started, or no, I'm already doing it. And that gives us really valuable feedback, guys, to know who of you are already going through the Monopoly Game Changer, who of you are not going through that and would like to talk to a consultant about enrolling. I'll just leave that going for a few seconds, Iain. And I think we're almost coming to the close. We've got quite a few of you who have voted. So obviously there's quite a few of you here who haven't started yet, which you really should be, in my opinion. Okay, going to give this 5 more seconds and I'm going to close this down. And hopefully you can see those results on screen, guys. We've got 44% said yes, you would like to get started. 55% of you, no, already doing it, which is fantastic. So let's just hide that one. And we'll go back to the second poll, which is, if you're not already doing signature credit recoupment, do you want to do it as part of the Monopoly Game Changer protocol? So yes, I would like to get started. No, I do not want to do it. Let me start that poll. So this is for those of you who are no doubt already going through other protocols with us here, but you're not doing the signature credit recoupment necessarily. You might have done something different. You might have done a mortgage. You might have done the envoy protocol or something of that nature. But in the Monopoly Game Changer protocol, we have those core protocols. We've got the Asset Fortress, envoy, and the signature credit recoupment, the currency creation side of things. If you're not doing that and you want to proceed with that as part of the Monopoly Game Changer protocol, this is the poll for you. Very, very different skew of votes on this one. We've got currently 87% of you who have said, yes, I would like to get started with signature credit recoupment, and only 12% of you that don't want to do that, which means you're probably already doing it. Right, I'm going to leave this just for a more second, guys, and then we'll close that one down. And I'm closing that now. So there we go. 87% of you would like to do that. 12% have said no. That's absolutely fine. So let's just go back. I'm going to go back to the chat so I can keep a handle on things in there, Iain. And we'll go to the next slide. Next steps.
Yeah, this is how you can book in consultation. I think we put this link in the chat as well, so that if you want to book in, they're quite busy. I'd recommend that you get a slot. We've got 6 consultants with their diaries, with different slots in their diaries. They'll help you to calculate the value of your tax redirection and answer your questions. You may need 2 meetings. One is to ask you questions about whatever it is you want to know, and the second one is to value, is to go away and just make sure your bank payment records or the amount that you want to add to your signature credit tax redirection is accurate, or broadly accurate. It doesn't have to be to the penny. It is estimates, which bank names, what amounts, which years, mortgages. I'd start with mortgages if I were you, if you've ever had mortgages, because they're pretty much going to be high value, high face values. If you can't make up 2 million on mortgages, then think about years that you spent a lot. Which banks did you use? What was the amount that you transferred out? Was it a business? Was it personal? Doesn't matter either way, but try and get to that 2 million value. Many of our members get there quite quickly, with mortgages taking up quite a big chunk of that. So if you want to do that with a consultant, work on that together, then we've got a calculator and they can answer your questions on how to do that. The link, I think, is in the chat. It's pretty easy. It's a Calendly. We've got consultants who operate in different time zones as well. So if you're not in the UK time zone, then we've got consultants that cover different time zones. And this will be this recording will be put out to all the different time zones where we have members around the world. So you should be able to book a consultation to suit your time zone. That's what I'm trying to say.
Yeah, I've just posted that in the chat, guys. I know you were saying I couldn't see the link. That's just gone in there. So you should be able to see that. lvfree.click/TGE. That is posted in the general chat for you now. So you can use that to book a consultation. And then we have a whole plethora of other important links. Unfortunately, I can't copy and paste these from the slide on screen, but we can certainly get these to you. I believe these go out with the handouts anyway. So these will be part of the email with the handouts, as far as I'm aware. If you want any of these links, then just ask and we can sort of individually post them in the chat for you if you need them. But most of these you'll be familiar with anyway. You should certainly be familiar with the Ecclesia Law channel. If you've not been looking at the reports on there, I would encourage you to do so. A lot of you have been asking for that link in the chat, so I've been posting that. It's very simple. ecclesialaw.is is the platform. If you go to reports at the top, you'll see all of Iain's reports there that you can dig into. If you want any of the information that we've been discussing together in the interviews, then that is on the media platform, which is rosmediaplatform.is. And there's multiple categories over on the left-hand side there, including the interviews that Iain and I have done on all the protocols, how they work, plus the tax transcript evidence that I did with my colleague here, and there's a 20-minute video there as well. So they're all the links. In terms of the handouts, we've got 9 of them. These are going to come over to you on an email. So literally 5 minutes after the webinar finishes, and that all starts to populate, and then that will obviously be going on platform as well for you guys to watch the replay if you want to. The handouts will come out to you on an email 5 minutes after. I would just encourage you to check your spam folders. Spam filters are notorious. So if there's anything in that email that the spam filters pick up on, it might be a word or a phrase, or the fact that there's a link in there, they can soon chuck it into a spam folder and not in your inbox. So just check your different folders to make sure that you can see it there, but we will be sending that to you as well. And then the Q&A side of things, like I said, if you've got questions from today's webinar, please post them in the Q&A tab on the right-hand side, not in the general chat. I've been answering what I can in the general chat, but anything that I've not gotten to, if you want us to address that on our Q&A session, you need to post it in the Q&A side of the channel, because that's the channel that I will be downloading after the webinar, and they're the questions that we'll be putting together for sort of Tuesday, Wednesday next week. But we do appreciate your questions. We do appreciate the feedback. If you have any feedback for us, you can always email us as well. You can go to admin@republicofoldsouls.is. Great to hear from you there. Good to have feedback. If there's anything that you feel needs to be improved upon with the webinars, or anything specifically that you'd like us to address or discuss content-wise that Iain can put together for you to help you understand it more clearly, we'd love to know what your thoughts are.
Yeah, and if you want to see what's going on during the week, get involved in our Playing Monopoly to Win Telegram channel, which we're updating daily. I quite often put different papers, research papers in there, and there's a lot of good information in there. And if you haven't already joined that, then I don't know if you, I think the link's on that prior page, I think. Andy, I think it's pretty sure it's on here. Yeah, Winning at Monopoly is the link there. I don't know if you could post that, if it's possible to post that one, because I don't think everybody's in there. I'd like to get more people in there if we can. There's a couple of thousand people in there, but I'd like to get a lot more in there. If we could share it around.
I'll have to manually type it in because it won't let me copy and paste from the slide, but just give me a second, guys, and I'll put that in for you.
It might be possible to click on it, actually. So I noticed that it might be possible just to click on it and it'll open up. So
you're absolutely right. And then I can copy and paste that from my browser.
And those that are on the webinar might also be able to click on it.
There you go.
That might be the easiest way of doing it. It's just to click on it.
So that's the Telegram group. I'll put that in the chat for you. Okay. Ecclesia law and the reports, if you want those, this is always a good one for you guys to have, is right there as well. And then I would definitely encourage all of you to go to our ROS Media channel, because Iain and I spend an awful lot of time every single week going through the different protocols. What I'm going to do is I'm going to give you a baseline here of the main protocols: the Monopoly Game Changer, Envoy, and the Asset Fortress protocol, which are all on the channel. So I'm going to pop this link here in the chat. And then if you just
the tree ties is probably worth it. We did a couple of hours.
Well, yeah, I can very easily grab that because I know exactly where that is. That is under credit recoupment, where you will see the 2 videos from both myself and Ange going over the actual tax transcript evidence. And then you'll also see Iain's treatise in there as well. It's taking a little while to load, so I'll get that on there for you in a second, guys. And that should give you at least some core links to be looking at. And when you think about it, why wouldn't you want to do this? You know, why wouldn't you want taxes back? I was thinking about this the other day, Ian, and it's like the best way I could describe this, because I know that we try and do this on our interviews, don't we, with all the members and then new people coming in, is what I try and think of it from a new member perspective, someone who has no real technical knowledge, like I was when I first started out. And how would I look at this and how would I explain it to myself? And when it comes to what the banks are doing here, that they're hiding this from you, they're profiting off your signature credit recoupment from you as well, and not saying anything about it. The way I looked at this was, it just, if you imagine that you had a car, let's say you had a luxury car, and you went and you parked that with a secure valet service at the airport, and you were off on holiday for 2 weeks or a month or whatever. It's like the valet service hiring your flashy sports car out for the next month, profiting on that while still charging you a parking fee. That's the way I look at this.
No, it's an extraordinary inversion for sure, and I think, you know, as I've mentioned many times, not everybody can do this, because there's the limitation is how much tax can be redirected. So if you want to get involved and make sure that you get your slot, because this is going to become very, very popular, and not everybody can do it because there is that limitation of how much taxes the banks are paying. We can't redirect taxes outside of what they've already paid. So that's the limitation. So once this really, really catches on, we're going to have to shut the door on it. So if you haven't started, then my view is you should get going.
Yeah, for sure. I've just posted that in the channel as well, Ian. So I've posted the ROS Media Platform channel segment under credit recoupment. There's 2 videos in there, guys. There's one with myself and Ange going through tax script evidence. Obviously, we're not going through the full 600 million of confirmed tax transcripts that we received from the IRS, but we're going through a handful of them. There's about 15 to 20 of them. Mine and my wife's are on there, so I talk about these as well. We received ours for 2022. So have a look at that, and then Ian's treatise video is in that same segment as well. Before we let everybody go, Ian, any final words?
Yeah, I was disappointed that our avatar was sensitive. It was up on trial for about 2 days. We got some good feedback on it, and then suddenly the platform that we were using, they censored it and stopped us using it. So we've had to go and find a solution, which we found, and our IT team have been redeveloping a new one. But it's going to be very popular, and if you are interested in spreading the word about what we're doing, that's going to be the easiest way of doing it, is to send that link out. And if you send it out to people that use it for more than 10 minutes, you get $100 for everybody that is engaging with it for more than 10 minutes. As like a digital wallet, it goes $100 per user, goes into your digital wallet. You can set that against protocols that we'll launch in the future, which will be to do with our Freedom Plan, and anything else that we're offering, any other protocols that we launch. So it's worth it, and it's how I want to spread the word, is to get the message out there, and also get more and more people coming to our webinars, and get more and more people coming on our ROS Media Platform, which we do go live on the social media channels, but of course they're censored as well. So we're not in. We need our members to share the links to get more people on the social media, because when Andy and I go live, we only get like a very low number of people joining us, and I'm pretty sure that's censorship, because it's and then coming up in a couple of weeks, Andy and I are going to be on a radio station. We're going to be doing a Friday afternoon show where we'll be talking about many things to do with the Monopoly Board, to do with how the credit, the tax redirection works. Many of my research papers will be going into ideologies that don't work and why they don't work. Basically, we'll be working through the research papers that I've already published on the Ecclesia Law channel. So we'll be announcing that. Next Thursday, I'm doing a live interview with the host of the radio show. It's called WTT. And then Andy and I will be doing a Friday afternoon. I think it starts at midday on a Friday.
Yeah.
Every Friday, we'll be having a chat, and we'll probably get people to call in and have a bit of fun, and maybe we'll do some live Q&As on there as well. Yeah. So it should be good. So if you're able to come, then that would be great. Spread the word on that. And I was happy to accept an offer from this channel because I think we've got information which people, a lot more people should know about. So it's another way of getting the message out. So that's
absolutely. And if you have the opportunity to join us, the radio show at 12 till 2 on a Friday, or typically when Iain and I go live on our Q&A sessions and when we're doing the reports as well, or the subject matters that Iain has covered in the reports, that is usually around 11 a.m. Okay, it's not every day, but certainly 11 a.m. If you're on social media, Facebook, or if you're on YouTube, if you're on either of those, or potentially X as well, what was formerly known as Twitter, 11 a.m. is typically when we kick off. We'd love to see you on there and get those numbers up a little bit more as well. What we can often do is when we get questions coming through in the chat there, despite the fact that we're covering material, we also try and address the questions that are in the chat too. So it's an ideal opportunity for you to ask for some clarity on what we're talking about. Well, Iain, it's been a great one again. I've enjoyed it. I hope you guys have enjoyed it too. And we will see you on the next webinar, which is again, same time, same day, next week. So next Saturday, 10 a.m., we will be back again with another important subject to cover. We'd love to have you with us. For now, if you need to book a call, book a call. If you want to get more clarity on the content, then you've got all the insights from the handouts, and you'll also have the links that we posted in the chat as well. So you've got the book a call link, you've got the link to the platform, the ROS Media platform. You've also got the link there to Ecclesia Law, so you can look at the reports there. Enjoy the rest of your weekend, guys, and we will see you on the next webinar. Bye for now.
Bye for now.